Okay, now we're going to get into the 8 different patterns that we used consistently in the chat room and for trading. And the first one is going to be the zero line reject. This is a trend continuation pattern. And on our first slide, let me give you a little psychology of what a zero line reject is. You've heard a number of people, especially brokers, tell you to buy the dip or sell the pullback. This is a constant thing that people say, well, buy the dip or sell the pullback. However, they never tell you when to buy the dip, and they never tell you when to sell the pullback. They tell you to do it, but they don't tell you when. This is the unique thing about the CCI. It tells you when it's time to buy the dip or sell the pullback. So that's the psychology behind that pattern. And if you can remember the psychology of these patterns and the story that it's telling you, it will also help you in your trading because you'll understand what's going on. So let's take a look at that. Zero line reject comes into play, as I said, buying the dip and selling the pullback. And the CCI is measuring when this buying and when the selling comes in. So let's take a look at a long trade setup and some examples. And this will really show you what we're talking about. Now in this graphic here, there are a number of things that we're going to have for a zero line reject to be a high probability trade, a trade that we would take as traders. One of the things is we have to have a trend develop. Can't have buying the dip if we don't have a trend developed. So what we got to have is we got to have our 6 bars above the zero line. We have to have our color-coded chop zone indicator, a solid blue on an uptrend, and yellow or green on the sidewinder. And once we have that and we've been above the plus 100 line, which is a criteria, once we're above that 100 line and then we pull back inside the 100 line, then we look for a good hook back. Now you'll notice something unique here. You'll notice that we had all these bars above the zero line and we did pull back to 1 bar below the zero line. Remember, 6 bars set the trend. So even though we went 1 bar below the zero line, the trend to the upside is still in place. So we're still looking for zero line rejects. So again, what we have on this hook back, we're looking for CCI points 15 minimum, 20 even better. So that's what we'd be looking for. 6 bars above the zero line, been above the 100 line, chop zone indicator blue for longs, sidewinder yellow or green, and a good CCI points on the hook back, a minimum of 15. Once that criteria is met, then that is where our buying comes in. And that's where our trigger for this trade is. Now let's look at the trade as it develops. Trend was up. We had buying the dip here. Buying started to come in. The CCI picks it up because it's a momentum indicator measuring what the herd mentality is. Herd being what the traders around the world are thinking. And the CCI picks that up with a good hook back, 15 to 20 CCI points. And you'll notice the trigger is bar close, or as I say, there are three triggers. One, for real aggressive traders, will get in as soon as they see it hook back. Two, a lot of traders will wait to 20 to 30 seconds to bar print. Other traders will wait to bar print. So wherever type of trader you are, that's what the criteria for your trigger. Once you get into the trade, this is what you should expect. You should expect that thing to be momentuming up to the upside and heading north. So that's the setup for a zero line reject long. What we also look for is a possible trend line break. As you can see, we use the turbo here and a little bounce off here on the 14. And so what we have is a trend line break, which is support or resisting in itself, and breaking that and a good hook back, and that's a perfect setup for a zero line reject long. Here's another case in point. We had a turbo touch and a 14 CCI touch. We had a hook around with a lot of CCI points. We were looking for longs, and you can see we got into this trade right down in this area here and followed that trend all the way up. So that's a zero line reject long. This happens to be on your mini Russell, and that's a nice trade going there. This is another one, zero line reject long. Again, we have a couple touches on our trend line. On our bar here, we have good CCI points. The chop zone indicators blue more than 3 bars. We had yellow or green on the sidewinder. We had the 6 bars above the zero line. We've been above the 100. And so our trigger is to go long right at the bottom here and follow that trend up. So again, nice setup there for zero line reject long. That's buying the dip. Here's another one without the price bars. And as I teach and mentor traders around the world to trade without use of price bars, and I mention this many times, the price bars do nothing for you. All they do is play a lot of mind games. People will watch price bars go up and down. They're in a trade long. They watch a couple ticks against them. The price bar goes down. They say, oh, it's going to go down. I'm going to get out of the trade. And sure enough, they get out of the trade. And 2 ticks later, the thing is off to the moon. So one of the things you got to be careful is in trading, you must eliminate the things that cause you problems. And watching price bars, watching candlesticks will cause you problems. So when I teach and mentor traders around the world, I get rid of those stinking price bars and just watch what the CCI is telling you. This is a perfect example. We're watching just the CCI and nothing else. We have a trend line break. We have a nice trade to the long side, solid blue on the chop zone indicator, solid green on the sidewinder. We were looking for longs, and we don't need to look at price bars. Our trigger is that bar right there, breaking that up with good CCI points. So there's no reason to have to look at price bars. So that's a perfect example right there, and you make your decisions by using the CCI trading panel by itself. If you haven't done that, and it's very hard for traders to get used to trading without watching price bars, it's very hard, but you people that if you try it, you will see it is a lot less stressful trading without watching things going up and down and your mind playing games with you. Much easier. I've had a number of people that I have mentored, including some big traders, got them off those price bars, and they had, what a difference and what an improvement in their trading has come from getting rid of those stinking price bars. So it's something you might take a look at. Also, if you really take a look at it, there is not one book written, there is not one book that is written that says you must watch price bars. The only book that is written on price bars is by Steve Neeson with candlesticks, and you're looking for patterns with the different candlesticks. But other than that, people will write books, they will show you charts, they will show you charts with price bars, but they don't tell you you have to watch the price bars. And so again, this is revolutionary and all part of the CCI trading system. All right, let's continue on here and show you some short trade setups and some examples. We just went through the long. Now let's take a look at the short side. Short side. First, we must have 6 bars below the zero line. We must have gone below the minus 100, and then come back inside the 100 and look for a possible hook back down again. We must have at least 3 bars of brown on the chop zone indicator. We must have yellow or green on the sidewinder. So we have all the criteria here. And again, even though it went 1 bar above the zero line, this could be 2 or 3 bars above the zero line. It doesn't change the trend until you get 6 bars above the trend line. Remember that. So we're still looking for shorts in this instance. So we get our hook around and we get 15 to 20 CCI points. That's the important thing. So we got all the criteria, and as you can see it up here, we had a downtrend, a pullback, and now we're looking for the psychology of the zero line reject to the short side, selling the pullback. And so we're looking for a sell. And let's move on here. So here's the trade. We had a downtrend, we had a pullback, CCI gave us a zero line reject along with a nice trend line break in there, and we sold the pullback. We got in the trade right here, and as you can see, this is what we should expect trading a momentum indicator. We should expect that thing to be momentuming and heading for the south side. So that's the short entry. That's the setup for a short using the CCI. Zero line reject. Remember the psychology. Buying the dip, selling the pullback. So let's look at a couple charts now. Got a trend line break. Got a brown bar, orange bar here, red bar to the downside. Brown on the chop zone indicator, yellow or green on the sidewinder. We don't exceed the 120. That's one thing we don't want to do, is exceed the 120, because we'd be chasing it. So we have a nice entry in here, and that will put us up in here and put us in this nice downtrend. So you can see exactly what happens on that selling the pullback. Got us in, and got us in right when that thing starts momentuming to the downside. And we should always expect that. You should always expect that to happen. If it doesn't, then you have to be suspect that the pattern might not be working. So anyhow, we had got down to extremes here, and as I said before, it usually only stays 1 or 2 bars and comes right back from that oversold condition. So that's a nice trade right there, and that's a typical short zero line reject to the south side. That was on the euro currency. The next, I'm going to give you some replay examples of the CCI pattern, the zero line reject. And this, what's unique here is the fact that we're going to watch, this is something new, watching a zero line reject in action, what it actually looks like instead of after the fact, what the pattern would look like before the trade and how the trade reacts. So let's get into that. Just to recap, for a zero line reject, we're looking for a number of things. Number one, we're looking for at least 1 bar to get above the 100 line. Number two, we're looking for 6 bars above the zero line, which we got. Number three, we're looking for the zero line reject to come back inside the 100. Number four, we're looking for a good hook around with good CCI points. Number five, we're looking for the sidewinder to be yellow or green. And number 6, we're looking for the chop zone indicator to be blue. So let's take a look at this trade, how it develops after we have everything, all the criteria, and that's our trigger bar right there. And let's see how this trade develops. Here we go. We got a fill back. We're in the trade, and here it goes. Thank you very much. Working beautiful, isn't it? Thank you very much. Remember, we have to thank the people on the other side of our trades. Thank you very much. CCIers are happy. Went up, come around, and we exit, in this case, crossing back through the 100. So you all saw that trade happen, and I got a few more that I'll go through. Remember the points. You got to have at least one bar go above the 100. You must then have 6 bars above the 0 line. You must come back inside the 100. And then you look for the good hook around like we got here. Chop zone indicator blue, sidewinder yellow or green, and that was our trigger to go long, and there goes your trade. So that's what a 0 line reject to the long side looks like. We'll go through a couple more. And as I said, this is completely different to see a trade actually key before and then to get the trigger and then watch it develop in real time. Okay, let's look at a 0 line reject to the short side. Same criteria. The only thing that we need is we need to have 3 bars of brown, and we need to be 6 bars below the 0 line. And 1 went below the -100. So let's take a look at this trade develop. Here is our short right here. And this is our trigger bar right there. And let's watch this pattern develop. This is a 0 line reject, buying the pullback, selling the pullback on the CCI. And here's the trade as it develops. Very nice. Continue going down, a little sideways action here. Continue going down. Continue going down. We're staying with the trade, no reason to get out of the trade. You can see how that trade is just staying below that -100. Look at that. Isn't that nice, people? Simple, simple 0 line reject to the short side of selling the dip. Selling the pullback, I should say. Still in the trade. No reason to get out of this trade. No reason whatsoever. And getting out, crossing the -100 is a good exit. So let's replay this again. We'll go back to the beginning, and I'm going to play it again. Remember, 0 line reject. Why wasn't it a 0 line reject here? Didn't have enough CCI points. But why is it there? Because we had plenty of CCI points. Now some people will say, well, there's a crossing of the 100. Why didn't you get out there? And my reason for that is, look at the angle. Remember we discussed angles? Look at the angle. It's just kind of a flat, showing there wasn't a lot of emphasis on buying there. So we crossed the 100, but yet it's very flat. So we can stay with this trade. Now if that was a good angle and showed a lot of buying coming in, then we could exit that trade. But right there, by looking at that right there, we could just stay with this trade and no reason to get out. Why do I say that? Because we're back below the -100. We still got solid brown on the chop zone indicator. We got solid green on the sidewinder. We're in a nice downtrend. So let's continue our trade. We continue our downward march. Goes right to extreme, bounces right off extreme, as I said, was an oversold condition, alleviating the oversold condition. More selling comes in, and we continue staying with the trade. No reason to get out of this trade. Just stay with it until it crosses the -100. And why do we use the -100 a lot? If you remember what I was talking about, the -100 is minor resistance. And once you break that resistance, you might just as well be out of the trade, because what can happen is it can start an upward movement. But the other thing is, if it's going to be a good movement, the CCI will definitely get us back in again. So there's that trade, and let's take a look at how that whole thing. We got short at 13,676. This is on the YM, a 5-minute chart. We got short at 136.76. So we stay in, we're just waffling around our entry, and all of a sudden here we're going to start going down. There's 63. The next bar is down to 61, 56, 47, 35. We're still staying with the trade. We're down to 26, 21, 135.93, 135.76, still staying with the trade. 135.60, 59, 25, 135.19, 135.07, and we get out at the end. So it got down to 135.07, and we got in at 136.76. How many points is that? Is that roughly 170 ticks to that trade on a YM? Beautiful trade. Again, there it goes. So you can see, people, just by using good money management with the CCI indicator, letting it tell you the story. It told you not to get out, told you to stay with that trade. Chop zone indicator stayed brown, the sideway under stayed green. Stay with this trade, don't get out of it. And 2 across his back, and you had a nice 170 point trade there. Okay, let's go on and look at another one. Let's take a look at another short. This happens to be on the German DAX. It's a 5-minute chart. There's our zero line reject. Nice CCI points. Chop zone indicator was brown, solid green. Look at that. No mixture of colors or anything. Beautiful. We've been in a downtrend. We got a pullback, so we're selling the pullback. And let's take a look at that trade. There's our entry bar right there. If we put a stop above our entry bar, you'll notice we're never going to get near that stop. And we just head down south. Thank you very much. Down at extremes, bounce away from extremes, and crossing the 100 line is an exit. Nice trade. Let me go back through that again. Yep, take a second here to go back and cycle back. We'll talk about it as we go down. Hang with it. Okay, now we're back again. 79.62 is our entry at bar close. Some people might get better. 79.62. Here we're going down to 50. And we got down to 50 to 45. We got down to 45. And our entry was 62. That's approximately 23 points at $35 a point. That's a nice, almost a $700 trade there on buying and selling the pullback in this case. Buying the dip, selling the pullback. So that's a zero line reject short there. Let's take a look at another one. The nice thing about seeing the trade is we can talk about, and you can see what you're looking for in these trades, and then to see the trade, how it develops. And that's the beauty of these slides being this way. So here's again the German DAX, a 5-minute trade. We've been above the zero line for more than 6 bars. We've been above the plus 100. We got a lot of solid blue on the chop zone indicator. We got green on the sidewinder. Number of CCI points, so we're looking for longs. and we're buying the dip here. And let's click on the chart and watch this develop. There it goes. We break that minor resistance of the 100 line, and as soon as we do that, you see this thing start to take off. Very nice trade. Coming back across the plus 100 is a nice exit. Get you out right near the top. Let's replay that again. All right. Our entry was 80.80 on bar close. We're up to 91, 92, 99, 100. And we get out at 94 approximately for a nice 14 point or about approximately a $400 trade. So again, a nice trade, nice zero line reject. Notice all the nice colors that we need. The idea of day trading is so we can react and get into these trades very fast. And as you noticed, when we got that good angle up and the solid blue, you don't have to look for things crossing anything. You got solid blue, green, good CCI points. You know you're looking for longs. Just react and get into the trade. So that's zero line reject long. Here's another one to the short side on the Russell. Again, we've been below the zero line for more than 6 bars. We've been below the 100. We come back inside the minus 100. We're looking for shorts. Nice trend line break. Chop zone indicators got more than 3 brown, sidewinded yellow or green. We don't need no stinking price bars. We just watch this trade and the CCI tell us the story. Here we go. Boom, right, 1 bar right through that minus 100, which was support. And we just stay with the trade as we go along. Stay with it as long as it stays below the minus 100. We don't want to get away from it. And there's our exit to get out of the trade. So a real nice trade that went for about 20 some odd ticks there on the low. So I'll play that again for you. And again, we don't need to watch price bars. See, we don't have to watch any price bars. We just watch what the CCI is telling you. Good angle down, continues the good angle down, continues the good angle down. Little profit taken, little sideways action. And if you noticed on that profit taking, the sideways action, you notice what we talked about, the turbo hooked into the 14 there. Give us in that head up that we were going to go a little sideways to an upward bias. You see that? So that's the beauty of trading the CCI with the turbo. So again, a nice trade. Classic, basic, that's all you need.